Good afternoon, this is Bob Iaccino coming to you from the CME Group trading floor in Chicago, talking crude oil, sitting around that 68.25 area right now. We got to a new low for the month of July, month of June as well. Got to about 67.03, but could not break that $67 mark, and we got a small recovery later in the day. Gold is now lower. 3 of the last 5 sessions, down 10%, almost 10% from the highs in that $75 range on the WTI contract. Those 3 days were much more dramatic than the 2 days, the 2 sessions that we had higher. All in, the last 5 days has been a big downdraft for WTI crude oil futures. Trump and Putin met yesterday, and that was something we were looking at in terms of possibly having a conversation about crude oil, but no mention of crude oil discussions so far between the leaders of 2 of the 3 largest crude oil producers. Now, it's well known that President Trump is trying to get the price of gasoline down before the midterm elections. It's happening, although it doesn't necessarily seem like it's happening through any of his efforts. He had tweeted that Saudi Arabia had agreed to increase production. Nowhere from sources in Saudi Arabia is that being confirmed, and there was a potential for him to discuss crude oil volumes with President of Russia, Vladimir Putin. Nothing's been announced at this point, although it is leading speculation about the idea that he might release barrels from the Strategic Petroleum Reserve, which we don't necessarily need anymore given the high level of production in the U.S. So we're probably still seeing a little bit of pressure from preventing the upside move from gaining any steam based off of that idea that's been making its way through the markets. Now, speaking of U.S. production, shale crude oil, which is the basis of WTI, most of the WTI volume now, 7 major shale regions are at new records in production as of last month. So again, supply continues to build into seasonality, which is winding down. The seasonal rally tends to go from end of February, beginning of March to end of July, sometimes through August, but that dip definitely starts to lead its way in September down when the summer driving season is over. We reached the peak of the summer driving season already, so demand in the U.S. is starting to slowly wane. We saw some of the refinery utilization numbers fall off from about the 98th percentile, which was 97.5%, down to about 96 and change last week. We get new refinery utilization numbers tomorrow. This is Bob Iaccino talking crude oil futures with a small recovery today from the CME Group trading floor in Chicago.